Welcome to the Women in Impact series, also known as WinImpact. We bring together some of the leading women in impact investing to talk about the innovations and challenges for financial advisors who want to offer impact investing options. If you are interested in a fresh and current perspective on impact investing, you are in the right place. I'm Rosanna, and this is Emily.
We're your hosts for the WinImpact series, and today we're talking to an expert in ESG fixed income, Jennifer Tonda. Jennifer has over 25 years in fixed income trading and sales experience. She currently serves as Director of Institutional Sales at 280 CapMarkets, an innovation-driven fixed income technology firm that provides price transparency and bond market access to advisors, institutions, and issuers through BondNav, its cloud-based trading platform. Jennifer's specialty focus is impact investing, as well as traditional fixed income products. She works closely with advisors to create custom bond ladders and portfolios that align with their investment objectives. Prior to joining 280 CapMarkets, Jennifer was the Senior Vice President at Falcon Square Capital and was the Director of Taxable Trading at Kroll, Weeden & Company, where she opened the firm's San Francisco office and helped develop its institutional business. She also previously worked at Stone & Youngberg as Vice President of Corporate Trading and traded corporate bonds and structured products. Jennifer started her career at Charles Schwab, where for over 10 years she worked as a senior corporate bond trader and pioneered positioning and risk management of taxable fixed income products. In her free time, Jennifer enjoys travel, swimming, biking, yoga, and photography. Welcome to the show, Jennifer.
Thank you so much for having me. And first, I also want to thank both of you for spearheading the WinImpact series. I think it's such an important topic and very timely. So thank you for doing that. And also, I appreciate you having me as one of your speakers.
Absolutely, and we appreciate that, Jennifer, and we are very excited that you could spare the time today. We did a panel back in February about impact investing with fixed income, and now it's October. Time really flies, and what an interesting year. A wealthmanagement.com article discussed the growing popularity of ESG. State Street's Spider finally has an ESG spinoff after hitting an ESG inflection point. And closer to fixed income, in COVID-19 pandemic boosts investor interest in ESG bonds, you mentioned that green, social, and sustainability bond issuance is projected to rise from $204 billion in 2019 to $400 billion this year. This is almost 200% growth in a one-year period. With 2020 coming to an end, what is the best way for advisors to introduce this into their client investor portfolio for 2021?
That's a great question, and I'm sure something listeners are wondering. So there's a couple different ways. First of all, you can invest in green SRI ETFs and mutual funds. Mutual funds have definitely been around a lot longer than the ETFs, but we did see the first green ETF come to market in 2017 by Van Eck. You can also invest in individual bonds, which is what we're mainly here to talk about today. So I wanted to give a quick description of the different types of impact SRI investments. Everyone kind of calls it something different. But if you look at a green bond, what exactly is a green bond? It's where the proceeds are used to fund environmental friendly projects. Visa last month brought a 7-year green bond, and the proceeds are used for green buildings, renewable energy, wastewater management, and projects that support sustainable living behaviors. There's also impact social bonds, where the proceeds are used to produce a social benefit. And example of that would be low-income housing bonds. There's also sustainable bonds, which uses the proceeds to fund environmental friendly projects as well as social projects. The first sustainable bond that we saw come to market was Starbucks back in May of 2016, where they supported farmers that were doing farming with sustainable practices as well as promoting fair and humane working conditions. There's also SRI investments, which are socially responsible investments. And a lot of that just uses screens to exclude certain companies such as tobacco, firearms, and gaming companies. There's also blue bonds, which use the proceeds to finance marine and ocean projects that produce positive environmental, economic, and climate benefits. So also when you do individual bonds, you can do custom portfolios and you can choose from a couple different products. There's green impact muni bonds, corporate bonds, agency bonds, and even mortgage bonds. And there's also, if you look at corporations, there's an array of different issuers. As I mentioned, Starbucks, Visa, Apple, Bank of America, Southern Company, Kaiser Foundation, Toyota, Mid-American Energy Company, and even Fabria, which is a Brazilian paper company. So you can see there's all different sectors to choose from. And one nice thing about doing a fixed income portfolio is you can get exactly what you want. If you want to exclude certain sectors like energy companies, you don't have to put those in your portfolio. Whereas if you invest in a green ETF or a green mutual fund, you're going to be stuck with whatever's in the portfolio. So again, if you wanted to keep energy companies out of that, a green ETF, green energy bonds, they might be stuck in their portfolio. And everyone does have a different lens when it comes to impact investing, right? Which could be SRI to one person, might not be SRI to somebody else. So by doing fixed income, you can get exactly what you want.
Great point.
Interesting. And that's a really great overview and insight into customization within the fixed income space. So in your recent Seeking Alpha article, Fight Climate Change and Protect Our Planet by Investing in Green and Impact Bonds, you make this point that contrary to popular belief, investors don't have to give up yield when investing in green and impact bonds. So do you come up against this misconception often? And how do you respond to those skeptics?
We do. I think one of the biggest misconceptions that we hear is that investors feel that sometimes you have to give up yield if you're going to buy a green bond or an impact bond. But in most cases, that is not the case. If you look at, as I mentioned, Visa brought a 7-year green bond last month, and corporates trade on a spread basis. So when the bond came, it priced at 35 basis points over the 7-year treasury. I looked today and I think the bonds are trading at plus 37 basis points. If you look at a global non-green Visa 7-year bond, that's trading at about 35 basis points. So you're actually picking up 2 additional basis points and buying the green bond. Not that that's a lot of yield, but it does show that the two trade right on top of each other. And you can almost argue that in some cases, you actually pick up yield. A lot of some of the impact SRI bonds that we see come to market might be smaller deal sizes. Like if you look at some of the CDFIs that come to market, like low income housing, since those deal sizes are small, certain funds can't buy them because they're not large enough. So therefore, there's a little bit extra yield. So you can almost argue you're actually picking up more yield when you sometimes buy an SRI or an impact bond.
Fascinating. More yield. You're doing good and you're getting yield. Love that. Really, really informative and very elegant in kind of how you explain that as well. So with the impact space and fixed income growing, can you tell us a bit more about the changes that you've seen during your time in the industry? Especially in the last few months with COVID, things have changed drastically. What are some exciting trends and innovations that you've recently seen?
Yeah, that's a great question. We are definitely getting a lot more interest in SRI impact investing. I mean, we are getting calls almost weekly from a lot of our accounts saying, hey, we know you guys are involved in impact investing, but can you tell me more about it and how do I get involved? And the other thing that we're seeing is we're also seeing more products come to market. One thing that COVID has done is it shined a spotlight on the middle child of ESG, which is a social component. So that's kind of getting thrown more into the forefront. So we are seeing more social bonds, and we've even seen COVID pandemic bonds come to market. Before the pandemic, I would say on new issues, it was about 80% green bonds and about 20% SRI, ESG, and social bonds. And the last couple months, we've seen that split change, and we've seen about 60% green bonds and about 40% on SRI social bonds. And like I mentioned, we've even seen new products come to market. We've seen COVID pandemic bonds. Back in April, when the pandemic was kind of first starting, African Development Bank brought $3 billion of a social bond, which was the largest social bond that we've seen come to market. I've read somewhere early this week in an article that if you look globally, there's been over 100 billion of COVID social bonds issued just since the beginning of this year, which is pretty amazing. So another example of this is Bank of America, who brought a pandemic bond back in May of this year. So the proceeds are used to fund eligible social investments that are related to COVID-19. And that can include funding nonprofit hospitals. It can also include supplying equipment designed to protect against the virus, as well as companies creating diagnostics tests or vaccines to help the pandemic. So we've also seen Capital Impact, which is the CDFI. They brought a pandemic bond where all the proceeds, again, are related to COVID-19 projects. So we've also seen more sustainable bonds come to market. Last month, we saw Google brought over $5 billion of a sustainable bond issue, which is the largest sustainable bond that's come to market. So not only are we seeing more products come to market, but we're seeing record size in their issuance as well. One thing, though, is that when companies do bring these new products to market, they still have to follow the green social bond principles, which have 4 different components, where you have to clearly state what the use of proceeds are, the process for a project evaluation and selection, the management of proceeds, as well as reporting. So, you know, there has been some concern that people are just bringing these bonds to market, and is anyone actually following through? And I would say the standards has definitely gotten more strict in the last couple of years, and there is a reporting process that does take place.
Interesting. So Jennifer, just to take a step back, are you basically saying that these standards are helping define what counts as a green bond versus potentially a normal bond? I imagine that would help a lot with some concerns about greenwashing.
Yes, well, when you bring a green bond, it all has to do with your use of proceeds. So you do have to clearly state that out in your prospectus when it's available. But what the standards does, it's still voluntarily. So it's not a mandate that you have to do it, but everyone is kind of following up on it. So if you do bring a green bond, an impact bond, a social bond, they are having these voluntary reporting that you are supposed to do. And most of the companies have to report either yearly or twice a year, or it could even be quarterly, on what percentage of your proceeds are going to what projects, and you actually have to spell it out. There's also some third-party rating agencies that will come out and actually rate the bonds and say, even though this is a green bond, we give it this rating, and they actually even dig in deeper to what the use of proceeds are.
I see. Thank you for explaining, Jennifer. And now I want to take a step back and sort of ask about your personal experiences. You've spent a lot of your career in fixed income, from Schwab to Stone and Youngberg, and now you're at 280 CapMarkets. So at what point and how did you pivot towards the impact investing side?
That's a great question. And as you mentioned, for most of my career, I was a corporate trader. So I was at Schwab and Stone and Youngberg, which is now Stifel. And a couple of years ago, I joined a small firm that was based in North Carolina. And most of the partners there were sales and traders. So they wore both hats. So in my previous careers, it was always you're either a trader or a salesperson. So I started venturing into some sales, and some of the accounts I was covering on the West Coast were doing impact investing. And I've heard about the space, but in the fixed income side, it was still relatively new. I mean, the first green bond wasn't even issued until 2008 by the World Bank. And so I started getting into sales back in 2014. So I started looking into green bonds, and I was just, okay, where's a list of green bonds? You could not find it. If you called the big banks and said, what can you offer in green bonds today? Nobody had any offers. So you kind of had to really dig. So I thought, well, this is something I've kind of been passionate about, you know, saving the environment and doing good. And no one is really doing it well in the fixed income space. So that kind of became my niche. So I did that for a couple of years. And 2.5 years ago, I joined 280 CapMarkets, where I am now. I worked with some of the founders at Stone and Youngberg, and they brought me on also to head up their impact investing department. And one thing that we have here is a cloud-based trading platform. So one thing that I love is that investors can go onto the platform and you can actually search for green bonds in the new issue and secondary market for corporates and municipals. The other thing you can do is you can also apply screens. So you can do, like we mentioned before, you can do negative screens and take out like tobacco, firearms, gaming, but you can also apply screens, especially like related to muni bonds, where you can look for land preservation, water treatment, pollution control, and higher education. And so it's just creating awareness in the space. And it's something that I think needs to be done. And as, especially with what's going on now with global warming, you know, we're in California, we have these fires running rampage. There is an issue. And with the pandemic, it's created more of a social problem that sometimes by bringing these bonds and supporting it, we can help tackle some of these bigger issues.
There are so many issues, and it's great to see that there's some financial awareness to that now, because that is an important component to making change happen. When we were talking about this at a different time, Jennifer, you did mention that, everyone wears a different lens with impact investing. And I think that is why it's so important that 280 CapMarkets has a software, has a platform that can enable advisors and anyone that uses that software to really be exact about allowing their clients to invest with intention and get exactly what they want with their impact values. So another question I had is, as you know, the fixed income mutual funds industry is huge. And there's data to show, actually there's a Bloomberg article that shows that a lot of these fixed income mutual funds are run by women have outperformed funds run by men since 2003. So you'd think that the number of female managers would be rising. In some of the data sets, it states the opposite is true. In fact, it states that only 14 US debt funds were managed exclusively by women, and that's compared between 2017 and in 2004. And the share of women overseeing bond or equity assets has stalled at about 1 in 10 since 2015. What are your thoughts on these trends?
Yeah, that's a really interesting point. But it's interesting when you look at impact investing as a whole and you look at a lot of the fund managers, since this has not, especially on the fixed income side, and even in general, it hasn't gotten as much attention. So if you look at the data from on the SRI impact side, previously it seemed that there was a majority of the fund managers were women, which is actually a little bit different than on the general market. But now that it seems that fixed income, SRI, impact investing is becoming more in the forefront, more investors are putting this in their portfolios, it seems that now more men are getting involved. So I think it's kind of an interesting data point. I do believe we do need more senior women in the space and actually in all leadership roles. I mean, and we are moving in the right direction. If you look at Citigroup last month, they did announce that they are promoting the first woman CEO, which is also the first big bank that's having a woman CEO. Which is great. We're also seeing more companies that are run by women that are targeting women. An example of this is Ellipfest, where they target women investors, and it's run by women as well. And another thing which I think is kind of interesting, and especially being that we're in California, more companies are trying to get women on their boards. And if you look at California, back at the beginning of 2019, we actually passed a bill called Women on Boards that stated that if you are a California public company based in California, you have to have at least one woman on your board. And depending on your size, potentially you have to have 2 women on your board, which I think is kind of fascinating because you can argue that diversity brings a more complete decision-making process, which is good for everyone and good for companies.
Yeah, thank you for those insights. And now to wrap up this interview, we like to ask all of our guests to share some of their tips. So for you, I was wondering, how do you learn all of this information about fixed income and impact investing? And do you have any last words of advice for success for our listeners?
That's also another really good question. Since I'm in the markets and they're constantly changing, there's always new issues coming to market, the spreads are changing, the merits on the company are changing. I just read a lot of daily news stories. And one thing that I read every day is Bloomberg puts out an ESG daily. It has an environmental, a social, and a governance piece. So I read that every day. I also, when I follow the new issue market and I see that a new issue is coming to market, I like to kind of read up on what the use of proceeds are for, what they're going to be earmarked towards. So then I try to keep, we put out little commentaries to our investors as well, like, hey, here's a new issue that's coming to market. And one thing that we do at 280 CapMarkets is we put out a daily newsletter called 280 Insights. And what that is, it just gives a quick blurb on the global economy. It puts some trends that we're seeing. And then we also put a bond idea of the day. We have a corporate, a mortgage, an agency, as well as a muni. And then we also highlight a green bond, which that can a lot of times be a new issue, or it might even be a secondary bond that we see that has value. So it's just constantly being updated on what I'm seeing out in the market. And to follow up with your last question on some advice that I have, I think one thing that's really important, especially since this series is for everyone, but kind of targeting women, I think it's really important to have a mentor. I know when I first got into my career back at Schwab, I had a mentor there who I'm still good friends with today. And I still talk to her, you know, almost on a monthly basis. And, you know, if I have a question or I need advice, I turn to her still. And I found that even in the past, she's come to me for advice. So it's nice to kind of see it also changing. 280, we do a program called the Cora Fellow. And what that is we get interns that rotate through different companies for about 3 to 4 weeks. And they go to like a broker dealer, it can be a finance company, it could be a tech company, a law firm, and they get to just kind of see how that company's run. And we are probably equal men and women as our interns, but it seems that the women tend to bond with me. So I usually try to make a point to take them out to lunch and, you know, just answer any questions they have on, you know, women in business, careers, and just whatever I can do to help. So I think it's important actually for pretty much everyone when they're starting off in a new job to have a women mentor.
That's great, Jennifer. And who wouldn't want to bond and talk to you? So I completely agree with and that's awesome that there is a system. And thank you also for sharing just a little bit back the 280 insights. I'll definitely be signing up for my bond idea of the day. So that's great. Well, Jennifer, thank you so much for sharing your important insights on the Women in Impact Investing series and joining us on this journey to win impact together. Listeners, please visit us at justinvest.com. Find us on LinkedIn, on Twitter, Facebook. This is a wrap for us. And until next time, let's win impact together. We will be posting all the resources mentioned during this interview. And we appreciate you joining us today. Investing done just right with Just Invest. Be well. Thank you.
Thank you.